what you're saying is you believe that there will be US-based ETFs that get approved that are Bitcoin, but then Bitcoin is used inside the Bitcoin DeFi, basis like a Bitlayer, to actually get yield on top of the Bitcoin.
I think we'll start from Europe or other jurisdiction first, and eventually come back to United States, right? But I think that will be like a major value unlock or like clarity in regulatory rights, right? As a major catalyst for Bitcoin DeFi.
What's going on, guys? Today we got a great episode with Charlie Hu. He is the co-founder of Bitlayer, and in this conversation we talk all about Bitcoin DeFi and what is going on with all this innovation, experimentation, and people trying to build products and services on top of, around, and near Bitcoin. There's a lot of questions. I have a lot of them too, and I think a lot of people are trying to better understand what's going on in DeFi, what's going on with Bitcoin DeFi. Is this stuff real? Is it not? What metrics should they be paying attention to? What are the metrics that are being gamed, and what the heck is actually a product that's being used versus something that's just hype? Charlie's here to explain it all. I think he does a fantastic job of helping us get to what is the actual signal among all the noise. Here's my latest conversation with Charlie Hu. All right, Charlie, I thought a great place to start this conversation is you live in Singapore, and there's this like what appears to be a dichotomy between Asian retail investors in Bitcoin and then Western financial institutions who are into Bitcoin. But because they both have this shared interest in Bitcoin, Asian retail, Western institutions, they're actually on the same team, on the same side of the table. Right. Talk us through a little bit as to kind of this unique setup here of bringing together two different groups that people wouldn't think are working together, but actually are.
Yeah, great question to start with. First of all, thanks for being here. I think we look at the Bitcoin ecosystem, right? We start from 2 years ago. What happened was Ordinals protocol came out, right? It was due to the fact Bitcoin has upgradation in 2021, the BIP 430, right? Which allows people to create this inscription on sats. It didn't really drive the attention in the Western community due to various reasons. I think a lot of people were still kind of in the initial of NFT and a few other kind of use cases last cycle. And Bitcoin Ordinals was kind of really heavily picked up and adopted by the Asia retail community. So that was kind of the reason I got interested, kind of orange peel myself to explore what kind of we can create use cases around Bitcoin, even doing assets around Bitcoin and also doing DeFi, right? Now it's become more and more obvious. There's an interesting adoption demand. So that was kind of the case. 80% of the Ordinals was created by the retail community in Asia. And also, on the other spectrum, Bitcoin community, a lot of them actually are miners. The Bitcoin mining community was heavily from Asia last cycle, right? Before a lot of the Asian countries banned Bitcoin mining in 2021, almost 30% of the Bitcoin hash rate was from the mining pools and miners in Asia. So that was a lot of that. But obviously, as a lot of the network, in the United States and maybe Western communities, the ETF came out. Right? Institution finally have a vehicle to come in. So it's very interesting, like two-sided spectrum, because it's the same network. We're talking about the same thing and same assets, right? The principle is the same, but people comprehend in different way, right? So people who are very, very just pure digital gold driven, they don't actually like any use case on Bitcoin network. But there's people actually wants to create interesting things on top of that to even getting more value recruits mechanism for Bitcoin, right? So that's kind of the beauty part, I would say, for Bitcoin network. It's so decentralized. It's so liberal. Different people have different opinions, but it's serving the same purpose and serving the same goal for this interesting assets, right?
When you think about the Asian retail community, what about the Asian institutions? Are they into Bitcoin as well, or is it pretty much retail?
In the beginning, it definitely was retail, right? I think until United States government actually approved ETF, right? And then Hong Kong approved last year. And now we're seeing Australia. And obviously you have Bitcoin treasury company like Metaplanet, right? There's quite a few new ones probably going to come out in Korea as well. It's just following up, right? I think that the momentum, the velocity of following up on this is getting higher and higher. But I would say a lot of the builders, a lot of the actual users in the Bitcoin network, in the Bitcoin ecosystem are still more or less retail, right? Who are interesting to see what are the interesting use cases for the Bitcoin assets. They are using all these kind of Web3 wallets such as OKX, Binance, or Coinbase wallet, right? To try new things. I think the level of curiosity and also the speed of adoption for new use case on chain, it's pretty high in Asia. Yeah.
When you think about the folks that are in Asia, how many of them are Western, citizens that have moved there versus are native to the geography?
I mean, I haven't done too thorough like quantitative research about this. I would say definitely quite a lot of them actually expect the people who live in Singapore, which we're based there as well, like huge community right there, Western community. They travel a lot. People in Japan, in Hong Kong, even in Vietnam. We were just there 2 weeks ago in the GM Vietnam conference. So a lot of expats are there, right? They mingle with the local communities, but they stay online. They do things online. They explore on-chain opportunity globally, right? So geographic location is not the hurdle for them, right? And I mean, because it's DeFi, it doesn't really need too much like KYC, you don't need a bank account for that, right? So it gives you this kind of a digital nomad kind of a liberty, right? And I think that's kind of the majority of the early user base, right? Yeah.
In these communities, like take Vietnam as an example, I think that the Western perspective of Vietnam may be different than the truth on the ground. What did you take away from being there in terms of adoption of Bitcoin? Are people using it to buy things? Like just walk me through kind of what are some of the lessons learned from a trip to Vietnam around
Interesting.
Bitcoin?
Yeah, I think it's a very great question. First of all, I've been to Vietnam many times. It's in Bitlayer, Vietnamese community is one of the most active retail community. We try to engage. We're getting quite a lot of interesting demand and inquiry, and also even builders wants to build things with us. So Vietnamese community is definitely one of the, first of all, as a country, Vietnam has highest crypto to penetrate rate. They were like multiple times number one in the world. So people actually use crypto in various kind of cases, right? Stable coins, payments, all that. And DeFi was pretty early. I remember one of the most OG DeFi protocols called the Kyber Network. The founder called Loy Lu, great OG in the DeFi builder. He's also our angel investor. So he told me a lot of things like they have a very interesting builder base who build interesting tooling, in the Bitcoin space, in the DeFi space. So I think people over there's a lot of interesting builders that have been very quiet. They just heads down building. And because of the fact, the opportunity for jobs and also for career-wise, crypto become a very important kind of alternative solution for them. So I think it's getting very high penetrated market, right? Retail-wise, there's a lot of people actually at very high knowledge level about the on-chain opportunities, DeFi use cases. The education level, just learning by doing, is pretty high. Yeah.
So we're talking about Bitcoin. Let's talk about just DeFi in general, right? I always joke, it's a little bit of a jab towards the non-Bitcoiners where I say Bitcoin was the first decentralized financial product, first DeFi product,
right?
True product market fit, very big scale, decentralized money. We now have seen a lot of other use cases around decentralization that's come to, we've got decentralized exchanges, we've got lending pools, all these different components.
Right.
What is the current state of DeFi in your mind, right? Forget about on Bitcoin, but just in general, is it working? Is it not working? Is it still kind of cautiously optimistic about the future? How do you see, the existing DeFi landscape?
Yeah, great question. So first of all, I'm very, very bullish on DeFi as the trend, as like adoption category in the Web3 space. I think this is one of the most battle-tested kind of almost like user adoption proven use cases among many other new frontier like AI agent and some other new things. It's started in Ethereum, right? From 2020. I was quite early, get to know what is, automatic market maker like Uniswap, and obviously on-chain lending protocols. We're using smart contract to do a lot of the interesting things. And it's just keep innovating that, doing the bear market, right, as well, right? In the last 6 years, we see a lot of the interesting new primitive across like perpetual DEXs, option trading protocol, leverage, staking, liquid staking. Things goes on, right? Something maybe not as successful as people thought. Something was massively successful. It just keeps sustainably growing, right, with the momentum in terms of TVL, on-chain transactions. Aave, one of the leading lending protocol on Ethereum, just hit a 50 billion on TVL, right, on the lending market. It's getting huge. Whereas, Ethereum, the reason Ethereum, with all this adoption, because they have the smart contract capability, right? If we definitely see the huge asymmetric potential if we bring this programmability features and verification components for the Bitcoin network. And then we're sitting on these massive assets, right? It has been not underutilized, has been idle in the last 10, 15 years. And I think this big amount of assets can be used with all these proven use cases. Then it's like massive value unlock. So yeah, you mentioned Bitcoin is the most decentralized, successful, winning assets. It's incorruptible. It's censorship resistant. It checks all the boxes to be the right assets for on-chain decentralized finance, right? But due to this lack of programmability and all these, infrastructure limitation, we can't really do like all these interesting use case around Bitcoin assets yet, right? We had a payment. That's pretty much it. Like Lightning had a kind of the alternative kind of plan B solution through state channel, right? Actually serve certain category of user base. But I don't really see too much on the mainstream yet. So I think that's kind of why we want to jump on board to building the infrastructure for Bitcoin DeFi. Yeah.
So you mentioned that Bitcoin layer 1 has a lack of programmability compared to some of these other L1s.
Yeah.
There are people who are building, the Lightnings of the world and things like that.
Mm-hmm.
I think a lot of people will hear about Bitcoin DeFi.
Yeah.
And if I say that to 10 people in the Bitcoin community, I'll get very different reactions. Some people are very excited about this. Some people think that it is all a scam and it's never going to work and it's just, hyperware or whatever. Walk me through, when we talk about Bitcoin DeFi, what does that mean? Are we actually building on top of Bitcoin? Is it a layer 2, side chains? Like, kind of just walk me through. And again, not so much just like what you guys are doing, but just maybe like understand the market first, and then we can dig into what you guys are doing.
Yeah. So there's two category of things, right, to understand. Bitcoin DeFi means Bitcoin assets, but serving, being provided as a liquidity assets for DeFi use cases, and also using Bitcoin network, right, as a settlement layer, things like that. So when we know DeFi, it's serving like covers a lot of the primitive, right? We have stablecoin, we have lending, we have all these new frontier of assets, kind of use cases, but pretty much none of them are actually happening on Bitcoin network, right? It had some small use cases in the past in the sidechain space, but I think after all those, now with big demand, also attention back to Bitcoin assets, we're looking at Bitcoin serving as one of the most important assets, coming into all the DeFi use cases, right? So the two categories to look at. The reason why WBTC started in 2018 was because they want to unlock the Bitcoin liquidity, right? To provide the new liquidity source to the DeFi space in Ethereum. It's using the centralized custody, right? A multi-sig approach to wrapping the BTC assets, right? To the WBTC through the WBTC DAO. So we call this like the first generation Bitcoin bridging, right? I know after you bridge over to Ethereum, you have this like wrapped version of a BTC token and assets, right? That you can enter all these lending, borrowing, decentralized DEXs, all kinds of use cases, right? So that's that. And then people wants to try a more decentralized way or trust minimized way to bring the BTC assets to all this new layer 1 framework. So that's that. If we talk about the kind of the ultimate definition of Bitcoin DeFi, there's a few principles we need to follow, which we believe that's kind of the standard. One, the transaction needs to settle eventually on Bitcoin network. We call this Bitcoin finality, right? So it's not just only on some side chains, which is completely side system, has nothing to do with Bitcoin security. In a way, we believe Bitcoin is the most decentralized network, right? So we trust Bitcoin, we trust the security level of Bitcoin. But if the transaction, like the DeFi transaction, happen outside of the Bitcoin network, and it's not actually settled on Bitcoin block, then it's not Bitcoin security, right? That's quite different. So that's kind of how we see the differentiating between like some sidechain, completely side systems, to like the real Bitcoin security equivalent rollup or layer 2, kind of how we see the new paradigm of infrastructure. And the second thing is, does this infrastructure use Bitcoin as gas fee, right? And a lot of the use cases, no matter it's like liquidity pool on AMM, DEXs, or other things, is using Bitcoin as liquidity assets, right? If the Bitcoin is not being utilized in the use case of DeFi, it doesn't really kind of fit into the category of a Bitcoin DeFi, right? So our definition of future Bitcoin DeFi should be Bitcoin as a gas fee, Bitcoin as liquidity assets, and being utilized by all the proven, DeFi use cases. And eventually the transaction settle back through the recursive proof or verification component, which a lot of team, including us, are building. And then transactions settle on Bitcoin block, right? So we don't have to put all the data, to congest it and make it congested, put on the Bitcoin network. It's pretty expensive. And, Bitcoin network, each block is only 4 megabytes, right? You can't really fit in everything there. But if it's just like the final proof data, right, which is like pretty optimized and, in a minimum way, but it still can represent all the transaction proof happening on the true rollup kind of model. I think that's kind of the best design choices, which we can keep the principle of decentralization, Bitcoin security, and using Bitcoin as important assets to the DeFi.
So I want to run through a couple of different components as we do rapid fire, right? The first is you're talking about speed of transactions. If you do it, off of the layer one, then you should be able to do it much faster. You write to the finality of layer one. Is that true? Is the idea of Bitcoin DeFi being structured in this way should provide more speed?
Yeah, I think at the end of the day, if we want to provide assets which can potentially get a mass adoption, right? Bitcoin currently is in the layer one, only have 7 transactions per second, right? That high throughput level is not enough if we talk about millions of users using that for on-chain trading or like lending or whatnot, right? It's not the best use case, right? We don't want people to wait for 20 minutes, for the settlement, right? Which takes that for the finality, right? It happens in 2 years ago, 3 years ago, during the ordinal season, right? People had a hard time to really verify when they were inscribing some, BRC20 or some kind of ordinals assets on Bitcoin. They have to pay huge amount of gas fees with the hard-earned Bitcoin they had, right? So that was the issue. That was a pretty bad kind of user experiences, which we don't believe that's going to sustainable in the long run, right? It's going to hit the certain plateau pretty fast, which happened at kind of the end of 2023. And I think when we talk about importance of, speed, right? We need to have an infrastructure in which Bitcoin is serving as the kind of settlement layer, right? That keeps the highest level of decentralization and security, but letting all this heavy lifting transaction throughput work, handled by this new layer infrastructure. So I think that's kind of the best way to keep the balance. Yeah.
Cost in terms of more expensive or less expensive doing this with Bitcoin DeFi?
We need the definitely less expensive kind of way to, for users to pay transaction fees, but, getting their, transaction processed, right? So currently, if we talk about some crazy mint, happening in ordinal season, people have to pay tens, even crazy time, hundreds of dollars worth of BTC, right? As a gas fee. It's kind of anti-human, right? You don't want to spend too much of the gas fees, right? To process some transactions. So it will be a hurdle. We saw that coming for use cases to really build. It's like the minute you get bigger and you get a lot of people have an interesting demand at the same time, it become unusable because the fee is getting too high, right? And then if we talk about certain low value kind of high transaction kind of transactions, it doesn't make sense, because the transaction fee is actually higher than the transaction itself, right? So that was kind of the hurdle for a lot of the user, especially the retail users to enter that, right? So I think that's kind of the problem we want to solve and make it much cheaper, still keep the similar level of security, and also, as I said, high throughput, right? So high speed.
So you mentioned security. That's another one. I think there's speed, there's cost, then there's security. Bitcoin obviously being the most secure computer network in the world. People are really excited about that. Mm-hmm. How do these Bitcoin DeFi projects or technology stacks kind of compare?
Today's episode is brought to you by Figure. They're the largest non-bank mortgage lender in the United States with over $15 billion unlocked on their lending platform. They've just lowered rates on their Bitcoin and Ethereum-backed loans to 8.91%. improving their already industry-low fixed-rate 50% LTV loans. They keep building as well, being the only major CBL player to launch decentralized MPC custody to protect against single-entry failure, and they just removed interest deferral fees entirely so you can let Bitcoin price appreciation pay for your loan over time. What is MPC decentralized custody? It's a Bitcoin or ETH on-chain wallet with multiple key shards to protect you from single-entity custody failure. You can always see your crypto ownership in a segregated wallet and verify your collateral hasn't moved. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click my link below to take out a Bitcoin-backed loan with Figure today.
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution. The Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. So you mentioned security. That's another one. I think there's speed, there's cost, then there's security. Bitcoin obviously being the most secure computer network in the world. People are really excited about that. Mm-hmm. How do these Bitcoin DeFi projects or technology stacks kind of compare?
Exactly. So I think that's the most important kind of parameter among the three, right? Speed, people can wait a bit. There's way people call it kind of even called a slow fi, right? The people were joking about it. But I think security is the most important thing. Like one of the key principle, right? People wants to make sure their transaction is secure, they're not being hacked, right? There's no vulnerability issues on the liquidity pools and so on. So on a smart contract layer, it's pretty much the same. Like we want to keep the design choice of what we think is best is, with same as Ethereum, like the most battle tested kind of smart contract infrastructure with EVM, right? Ethereum virtual machine. But then the transaction eventually needs to settle on Bitcoin block. Right. So that's kind of the key difference between the true Bitcoin security equivalent rollup model compared to the sidechain, right? So the sidechain, in case people don't know, transaction doesn't really settle back to Bitcoin network. It's settled within their own validated sets. So it's sidechain security, right? So sidechain security is fundamentally different compared to Bitcoin security. So how to, have the speed and the low cost, kind of infrastructure, but still have the similar level of Bitcoin security. I think that's kind of the breakthrough we need to actually build, right? And actually get that kind of infrastructure to the market. So the verification components become one of the key solutions. So if the transaction is not verified and settled back to Bitcoin, then it's essentially just settled on the sidechain system, right? So let's take an extreme example. If there's a vulnerability hacks, right? Issues in the sidechain, and users actually cannot withdraw their assets, which they bridge over from Bitcoin layer 1 to the sidechain. They cannot withdraw back seamlessly. So eventually, if the sidechain, get issues when it security hacks, then your assets get lost, right? So this is kind of the most important thing people try to avoid, right? It happened in quite a lot of sidechain systems in Ethereum and other ecosystems before. And I think we don't want to see that happen in the Bitcoin space, right? So we want to say, if we want to build a true mass adoption, high potential infrastructure, the Bitcoin settlement or Bitcoin finality, I think that's kind of one of the most important principle we need to keep.
All right. Explain a little bit more about what Bitlayer, what you guys are doing, how this works, what's live, what's not.
Sure.
One of the aspects that, as I've gotten to know you and we started to do some work together, I think I found most interesting is you guys, I think, have Franklin Templeton as investors, but also Polychain. Yeah. And there was like on completely different end of the spectrum, right? You get like hardcore crypto native, type investor, and then you basically have as TradFi as they come, right? Yeah. All investing in the same thing. So describe a little bit of just like how this is working and what you guys are seeing so far.
Sure. So Bitlayer started at the end of 2023, right? Kind of right before or right between this kind of ordinals craziness season. Network in Bitcoin in the mempool was very congested. People were paying crazy amount of gas fee, right, to inscribe, creating all these on-chain assets. That's kind of the kind of the macro context of why I will start doing research about how to scale Bitcoin with the principle I was just explaining. At the landscape at that moment, there was no like best design choices. I was looking at like Lightning Network, RGB, Nostra, a few other very exotic kind of not well adopted, well built kind of solution. And it was kind of coincidental, like right after the Ordinal Summit in Singapore, like October, that event happened. I saw on the white paper that of BVM came out. So like since then, me and my co-founder Kevin, we quickly align on the technical vision. We start working and doing research about BVM. It's basically using the existing Bitcoin script without actually depend on any Bitcoin network operation to build this like on-chain verifiable fraud-proof kind of component to verify malicious potential transactions that can serve to build. They serve for two products. BVM can as a very key, interesting technical, mechanism to build this new generation Bitcoin bridging solution. We call this BVM Bridge. So currently, Bitlayer already launched our BVM Bridge mainnet last month. We fully finished auditing. It's in production mode. Like retail small users in the Bitcoin space, even in the future, the institutional clients actually can use our new generation Bitcoin Bridge solution to, in a more trust minimized way, to bridge the Bitcoin and lock the UTXO and mint on the destination chain to get the bridged version BTC, which is one-to-one packed. That's kind of the key first product that's fully already live. The second product I mentioned is the BVM powered Bitcoin equivalent, Bitcoin security equivalent rollup, right? So it's not a sidechain. So the key components in infrastructure wise, BVM solution is trying to build is this verification component, Bitcoin verifier. So for the people who understand Bitcoin network, right? Bitcoin in the layer 1, it doesn't really have this built-in smart contract, right? There's no verification component. So Bitcoin network cannot actually read and understand and verify certain things you send to them, right? It's not the case in Ethereum. Ethereum or any other layer 1s actually have their programmability, so they can verify things. Verification is one of the key kind of missing gap, right? We see in the Bitcoin space. If we're trying to build this like Bitcoin security rollup system, we need to have this like verification component. So currently, Bitlayer, we are one of the key BVM Alliance members, doing the research and working on the engineering solution and optimize this verification, module. And it's actually getting close. I think we are like weeks away, getting close to finish the fully audit and, finish the bug fixing. And then we can launch the verifier. So that's kind of the key missing gap. We say, okay, between the Bitcoin sidechains and Bitcoin true rollup, right? That's the Bitcoin verifier is the key infrastructure piece we've been working on. And I think, teams like us, we are very excited. We weeks, not mentioning years, right? We're not even months away to get this launch. But we want to make sure this is secure. This is battle tested. So it will be like a period of launching, right? It's not like a fee switch. It's not like a switch on off. It will be like probably 2 or 3 months of gradually test out, like start from alpha and then beta, and then public beta, and then actually getting more and more use case on board. I think the actual Bitcoin security equivalent rollup is coming to life to the market very soon. Yeah.
What's the biggest risk here for people? Is it the security stuff or is it something else?
The risk, I think for any use cases in the Web3 space, right? If we talk about infrastructure, the risk is people actually don't know how to use it, right? So misuse of the smart contract, people actually, there's Ethereum every day, there's people sending, their funds or assets to the wrong address and so on, right? So that's not certain things like we actually can avoid as an infrastructure builder, right? The second thing is when we look at this solution, I think it's just lack of knowledge, lack of education. So it's not a risk. It's more like it will take a while for a lot of people get to know this and jump on board. So we might need quite a few interesting catalysts to really trigger the adoption, right? And one of them, in the macro perspective, I believe I've been talking across many different events and also podcasts, is the Bitcoin ETF staking approval.
Explain this. What's that?
Yeah. So right now, Bitcoin have the ETF, right? Which is like tens of billions of volume already. But all these ETF companies is not supposed to use their Bitcoin exposure to have like a proper official yield strategy, right? But if we have the ETF staking approval on Bitcoin, I think more and more company will be like, okay, having the Bitcoin exposure, let's explore like a proper, DeFi yield strategy.
So just to repeat back to you what I'm hearing, which is ETH, Solana, many other altcoins, they have the ability to stake. If they stake, they can get yield.
Yeah.
In the United States so far, they've not been allowed to do that inside the ETFs. Outside the United States, there are certain ETFs around the world where you buy the ETF, they take the capital, they buy the asset, and they stake. Sometimes they give you a percentage of the stake back. Sometimes they buy back shares. There's all kinds of different ways to pass it back to the holder. What you're saying is you believe that there will be US-based ETFs that get approved that are Bitcoin, but then Bitcoin is used inside the Bitcoin DeFi spaces like a Bitlayer to actually get yield on top of the Bitcoin. And then same mechanism is that people will be able to buy the ETF and get Bitcoin yield essentially inside of these wrappers.
I think we'll start from like Europe or other jurisdiction first, and eventually come back to United States, right? But I think that would be like a major value unlock or like clarity in regulatory rights, right? As a major catalyst for Bitcoin DeFi. We start from all the early adopters, right? The active native users, the DeFi users, the retail, right? I think that's kind of what's happening. For the people who actually haven't really touched anything with Bitcoin DeFi use cases, it's already kind of there in the market. A lot of people have really kind of have been using that. We have around 3 million daily active user, or at least like unique wallet addresses that are being used our network more than like 10 times. We have around 20 very active, fast-growing use cases on DeFi space that build on our network, and over 70 million transactions happen. So I think among all these things happen, we're getting like retained users who actually kind of building the habits to use their BTC to do all kinds of things. Yeah.
Talk me through Bitcoin as an asset that is non-productive versus productive. What are some of the other changes that you expect to happen in the world? You mentioned the ETFs will, offer this to people. Are there other things that we should start to think about in terms of how people think about Bitcoin, use Bitcoin, hold Bitcoin, anything once there is maybe more widespread ideas around yield?
I think, there's definitely some work to be done and improve in terms of yield products, right? For BTC assets. Different yield with different APY with different underlying risks. So we're seeing a lot of kind of yield, protocol builders that wants to utilize our infrastructure in terms of BVM bridge and roll up to build interesting, yield component. And I think the next wave of BTC, yield product needs to be serving like with very good user experiences. Some of the underlying assets can be stored in a centralized way, like in the custody, and also decentralized way in some vaults. And it could be multi-chain, right? So as with our BVM bridge, can be one-to-one packed, seamlessly bridged to other infrastructure and layer ones. So the programmable BTC can be entered all the DeFi use cases to access to an APY from 4% to 10%, right? Depends on the actual use cases. It was on top of some kind of certain incentives. And eventually, I think we will hit some equilibrium, right? On the DeFi builder side, they find a like sweet spot, right? They can sustainably provide yield with certain APY that actually have a customer demand, right? On the demand side, I think people will be getting more and more practical and realistic. If you want to put their Bitcoin to use, they can't really expect, let's say, crazy high APY, like 20% in a sustainable way. It doesn't really work in that way. I think we're going to hit some interesting equilibrium in the supply demand once we get more and more products out, and also more and more Bitcoin users, from the retail to the, liquid funds, even the institution actually come into place. Right now, it's kind of a lot of moving parts still kind of figuring out. The product market fit is still kind of a lot of the dynamics moving at the same time. But I think you mentioned about some interesting new use cases, right? I'm very excited and also very looking forward to see the kind of high frequent on-chain protocols will be built on the Bitcoin rollup, right? A scalable rollup. So it's not just staking, not just like lending, which is like relatively we call this like low frequent. So like low frequent meaning the time you need to interact the infrastructure is fairly low. Like you maybe do that like once a week or even once a month. We might see some interesting Bitcoin-based use cases, which is high frequent, such as perpetual DEXs, even on-chain option protocol, like prediction market, for price prediction, that actually doesn't require rigorous KYC, right, in a DeFi way to do that. But I focus on Bitcoin assets. We might even see like a Bitcoin version of Hyperliquid type of protocol coming along the ways. Yeah.
Describe that. What would that look like?
No, so basically, the transaction eventually will settle on the Bitcoin block, right, through in the rollup model. The underlying assets on the Hyperliquid, most liquidity assets will be BTC or different version of BTC, and obviously have the stablecoin as another counterparty in a counter side on a trading pair. Users can actually, do native on-chain, perpetual trading on that kind of protocol. Hyperliquid is a very good example, right? It's a scalable infrastructure.
Yeah, they're doing okay.
They're doing very okay in terms of trading volume, right? People can actually, in an on-chain way, decentralized way to do buy, call, and put option, and also doing leverage trading. I think that's clearly say there's an interesting demand on that in trading perspective. I think a lot of interesting, decentralized Bitcoiners probably wants to do that as well. That might be I open up like more on-chain use cases. And I think I forgot to mention one point. The reason we build this infrastructure actually can have value for the Bitcoin community is we can generate more fees, verification, right, back to the Bitcoin network. So there will be a like new revenue stream for the miners. I think what we want to do is to make sure Bitcoin network is being utilized by people. Mempool is not going to be empty. I think after Ordinal season, the Bitcoin network in the mempool has been pretty empty. It's not too much transaction happening on the network. If we talk about upcoming tens of trillions of major, well adopted, assets, as a financial assets, right? If the underlying network, nobody actually use that, if all the assets are just being idle as a network, I don't think it's actually really good in the long run. The miners were having hard time to justify a couple, rounds of halving down the road. They can still keep the good profits, maintain the hash rate, to provide security for the network. So we've been talking to quite a lot of mining pools to, because we want to serve as like a new revenue stream to provide new transaction on the network. And so miners actually can get in the fees on that. Yeah.
Let's talk about TVL. I saw recently that you guys hit #1 on TVL for, I think, Bitcoin DeFi.
Yeah.
Is that a good metric? Like I see people sometimes yell and scream and say that it's like a kind of a nonsense metric.
Yeah.
How do you guys think about that? What does that mean? Talk through a little bit as to like the popularity of what you're doing.
Yeah, I think, on-chain TVL called a total value locked, right? It's still one of the most used metric if we talk about what's happening in the DeFi space, right? Like, obviously the other important metrics is on-chain, the number of volume, right? And the number of transactions happen on-chain. We hit over 70 million now recently. The TVL on DeFi Llama, which is one side of aspect we're looking at. Okay, is there any real assets on your network? I think that's very important. We wanted to make sure there's enough assets and enough liquidity in our network, so more traders can come in, more builders wants to come in, right? One of the most important kind of way to support the DeFi protocols is actually support liquidity, right? And I think without liquidity, you can't do too much as a DeFi builder. So I think that's important. But I think TVL is not the only metric people just tunnel vision, right? There might be some controversial case, certain protocol, in the liquid staking space, they just double count, even triple count some of the assets, which is like same underlying assets, but being counted multiple times, right? So when we talk about TVL, we back to #1 on the DeFi Llama ranking. We also need to look at number of use cases and also number of transactions happening on chain. So for us, like the reason we have quite a big growth in the last 2 months was because of the Bitcoin DeFi education campaign we did with Binance Wallet, which I think we drive interesting amount of retail users came over to our ecosystem, and I actually started providing their BTC liquidity to our DeFi use cases and protocols. Obviously those growth So sometimes it's temporary, right? We want to educate the users, and eventually some of them will here to stay, and they will become like retained active users. And obviously, by doing those campaigns, we can support and help those protocols that build on top of us to grow further. And I think that's very important to build like a healthy, sustainable, strong ecosystem on that.
That makes sense. Where can we send people to find you online or find out more about Bitlayer?
The best way to follow us and see what we do is follow our Twitter. It's Bitlayer Labs. On our website, bitlayer.org, we kind of cover all the fundamentals. You can find our white paper there. And also our ecosystem leaderboards, which we sort out all the top TVL, top transaction, top popular protocols. And we have the user center. People can play around with different interesting on-chain tasks to earn some of your rewards. And yeah, we try to bring the best use case in our ecosystem to the right users. I think that's the best way to follow us. Yeah.
Amazing. Well, thank you so much for taking the time to do this. It's pretty incredible to see how much innovation and I think experimentation is happening on top of and around Bitcoin. And obviously the principles of decentralization, I think, are very unique to Bitcoin. And so seeing more services and products built on top of and around it, I think is a worthy cause. So thank you so much for all the work you guys are doing, and we'll do it again in the future.
Yeah, looking forward. Thank you very much.